In just a few years, WeWork went from a small co-working startup to a $47 billion empire. Its founder lived like a billionaire rock star, flying on private jets, hosting extravagant parties, and building one of the fastest-growing startups in the world. Investors believed the company would revolutionize the future of work. But behind the scenes, something was deeply wrong. And when the truth finally surfaced, the entire empire began to unravel. To understand how this happened, we need to go back to the beginning. Because the story of WeWork didn't start with billions of dollars. It started with an ambitious entrepreneur with a very big vision. The man behind the vision. Adam Neumann was not a typical Silicon Valley founder. Born in Israel in 1979, Neumann grew up in a family that moved frequently. By his own account, he struggled in school and was diagnosed with dyslexia at a young age. But what he lacked in academic discipline, he made up for with confidence and charisma. Friends and colleagues often described him as magnetic. He had an unusual ability to convince people to believe in big ideas. After serving in the Israeli Navy, Neumann eventually moved to the United States. Like many aspiring entrepreneurs, he wanted to build something huge. But at first, success didn't come easily. His early ventures included a business selling baby clothes with knee pads, designed to protect crawling toddlers. The company was called Crawlers. It didn't change the world. But during this period, Neumann met someone who would later become a crucial partner in his future success, an architect named Miguel McKelvey. And together, they would soon build something that seemed like a simple idea, but would eventually attract tens of billions of dollars in investment. The birth of an idea. Around the late 2000s, cities like New York were experiencing a new trend. Freelancers, entrepreneurs, and small startups were growing rapidly, but many of them couldn't afford traditional office spaces. Office leases were expensive, contracts were long, and for small companies, the system simply didn't work. Neumann and McKelvey believed they had a solution. What if companies could share office space? Instead of renting an entire building, people could rent a desk or small workspace inside a larger shared office. In 2008, the two founders launched an early version of this idea called Green Desk. The concept was simple: shared workspaces, flexible leases, community-focused offices. To their surprise, the idea worked. Demand grew quickly. Eventually, they sold Green Desk to investors. But instead of stopping there, they decided to build something even bigger. And in 2010, they launched a new company, a company they called WeWork. At first, it seemed like just another co-working business. But Adam Neumann believed it was something far greater. In fact, he insisted that WeWork wasn't a real estate company at all. He called it a technology company that would change how people work. That claim would become incredibly important later, because the way a company is categorized can dramatically affect how investors value it. And investors were about to become very interested in WeWork. The first WeWork location opened in New York City. The space had exposed brick walls, modern furniture, open desks, and communal areas designed to encourage collaboration. For freelancers and small startups, the concept was appealing. Instead of renting an entire office for years, businesses could pay monthly memberships. Within a short time, the building filled up. Then another location opened. Then another. WeWork was expanding quickly. But what truly fueled its growth wasn't just demand. It was venture capital. Investors in Silicon Valley were searching for the next big thing. Companies like Uber and Airbnb had already shown that startups could scale incredibly fast. And Adam Neumann had a compelling story. He didn't just talk about renting office space. He talked about building a global community, a world where millions of people would work, collaborate, and innovate together inside WeWork buildings. The pitch was powerful, and investors began writing very large checks. But there was one investor who would take things to an entirely different level, and that investor was SoftBank. SoftBank is a massive Japanese investment firm led by billionaire Masayoshi Son. Son was famous for making bold bets on technology companies. He believed in backing founders who thought big, very big. When Son met Adam Neumann, he reportedly made a decision about the investment within minutes. According to several accounts, Son told Neumann something simple: think bigger. Much bigger. And with SoftBank's backing, that's exactly what happened. SoftBank eventually invested more than $10 billion into WeWork. The company expanded aggressively across the world. Cities across the United States: London, Shanghai, Berlin, Tel Aviv. Dozens of new locations opened. The company hired thousands of employees. At one point, WeWork was opening new offices almost every week. Investors were impressed by the rapid expansion. And with each new funding round, the company's valuation continued to rise. First a few billion, then 10 billion, then 20, until eventually, something extraordinary happened. WeWork was valued at $47 billion. That made it one of the most valuable startups in the world, more valuable than many established corporations. And yet, there was something unusual about the company's finances, something that most people didn't fully understand yet. Because while the company was growing rapidly, it was also losing huge amounts of money. But for the moment, investors didn't seem to mind. They believed WeWork was building the future, and Adam Neumann became one of the most famous startup founders in the world. As WeWork's valuation soared, so did the lifestyle of its charismatic founder. Adam Neumann wasn't just running a startup. He was living like a celebrity entrepreneur. Reports described extravagant company parties, private jets, luxury homes, and a corporate culture that felt more like a festival than a traditional business. Inside WeWork offices, employees sometimes attended large social events filled with music, alcohol, and motivational speeches from Neumann himself. He spoke passionately about changing the world, not just building offices, but creating a global movement. To many employees, the mission felt inspiring. But behind the scenes, some executives were beginning to worry, because the company's finances were becoming increasingly difficult to ignore. WeWork was signing long-term leases on expensive buildings, then renting the spaces out on shorter-term memberships. This model could work during strong economic times, but it also carried enormous risk. And the more the company expanded, the bigger that risk became. Still, investors continued pouring billions into the company. The vision was exciting. The growth looked unstoppable. And Adam Neumann seemed convinced that WeWork would soon become one of the most important companies in the world. But in 2019, everything was about to change. And what investors discovered next would trigger one of the most dramatic collapses in startup history. By 2019, WeWork appeared unstoppable. The company had expanded across the globe, opening hundreds of co-working spaces in major cities. Thousands of startups, freelancers, and companies were renting desks and offices inside its stylish buildings. From the outside, everything looked like a massive success. But inside the company, the numbers were telling a very different story. Because despite its explosive growth, WeWork was losing an extraordinary amount of money. In fact, in 2018 alone, the company lost nearly $1.9 billion. And yet, investors continued supporting the company. Why? Because they believe the losses were temporary. Many tech startups lose money in the beginning while they grow. Amazon famously lost money for years before becoming one of the most profitable companies in the world. So investors believed WeWork might follow the same path. But there was one moment that would force the company to reveal everything. In 2019, WeWork announced it was preparing for an initial public offering, also known as an IPO. This meant the company planned to sell shares on the stock market, and that required something very important: transparency. For the first time, WeWork would have to reveal its financial information to the public. And what investors discovered inside those documents shocked the entire financial world. In August 2019, WeWork released its IPO filing. Financial analysts, journalists, and investors immediately began studying the document. And the deeper they looked, the more concerning things became. First, the losses were far worse than many had expected. WeWork had lost billions of dollars while generating far less revenue than investors assumed. But the real problems went beyond financial losses. The filing revealed a series of unusual decisions made by the company's leadership, and many of those decisions were directly connected to Adam Neumann himself. For example, investors discovered that Neumann had personally purchased several buildings. Then he leased those buildings back to WeWork. In other words, the company was paying rent to its own CEO. For a public company, this raised serious questions about conflicts of interest. But that wasn't the only issue. Another detail caught the attention of analysts. Adam Neumann reportedly owned the trademark for the word "we," and at one point, WeWork paid him nearly $6 million to use the word in its own branding. These revelations began to change the perception of the company. Suddenly, the charismatic founder who had inspired investors began to look far more controversial. and investors started asking a critical question. If WeWork wasn't really a technology company, then what exactly was it? For years, Adam Neumann had described WeWork as a technology company, but when analysts examined the business model more closely, they realized something important. WeWork was essentially a real estate company. The company signed long-term leases on expensive office buildings. Then it rented out smaller spaces to customers on shorter-term agreements. This created a dangerous imbalance. If the economy slowed down and customers left, WeWork would still be responsible for paying massive long-term rents. In other words, the company had taken on enormous financial risk. And when investors understood this structure, confidence began to fade. Suddenly, the $47 billion valuation no longer made sense. Criticism spread quickly across financial media. Major investors began questioning whether the company was worth even a fraction of its previous valuation. And within weeks, the situation began to spiral out of control. As doubts grew, investors started pulling back. The planned IPO began facing intense scrutiny. Analysts criticized the company's governance structure, its financial losses, and its unusual leadership style. Even SoftBank, the massive investor that had supported WeWork's expansion, began reconsidering its position. The once unstoppable startup was now facing a crisis. Media coverage intensified. Headlines questioned the company's leadership. Former employees spoke about chaotic management decisions, and investors began losing faith. As a result, WeWork's expected valuation collapsed from $47 billion to around $20 billion, then even lower. Some analysts suggested the company might be worth less than $10 billion. The dramatic shift stunned the startup world. Just months earlier, WeWork had been one of the most celebrated companies in Silicon Valley. Now it was becoming a cautionary tale, and at the center of the storm was Adam Neumann. As pressure mounted, WeWork's board of directors faced a difficult decision. Investors believed the company could not move forward with its IPO while Adam Neumann remained in charge. Criticism of his leadership had become too intense. In September 2019, the board took action. Adam Neumann was forced to step down as CEO. It was a dramatic moment. The charismatic founder who had built the company's identity was suddenly removed from power. But the story didn't end there. Despite stepping down, Neumann negotiated a controversial exit package. Reports suggested the deal could be worth over $1 billion. The agreement included consulting fees, loans, and the sale of his shares. For many observers, the situation seemed astonishing. The company had lost billions of dollars. Its IPO had collapsed, and yet its founder was leaving with a massive payout. Meanwhile, the company itself faced an uncertain future. Without the IPO, WeWork was running dangerously low on cash. The company needed immediate financial support to survive. SoftBank eventually stepped in with a rescue plan. The investment firm provided billions of dollars to stabilize the company and prevent bankruptcy. New leadership was installed. Expansion slowed dramatically. Costs were reduced, and thousands of employees were laid off as the company attempted to restructure. The days of extravagant spending and rapid global expansion were over. WeWork was forced to confront the reality of its finances. In the years that followed, the company attempted to rebuild. It eventually went public in 2021 through a different process known as a SPAC merger. But the valuation was far lower than its previous peak. The once celebrated $47 billion startup had become a symbol of something else entirely. A warning about what can happen when hype grows faster than the underlying business. The rise and fall of WeWork reveals something powerful about the modern startup world. For years, investors believed they were funding a revolutionary technology company. But in reality, the business was far closer to a traditional real estate operation. The difference between those two ideas changed everything. WeWork's story shows how powerful narratives can attract enormous amounts of money. A compelling vision can inspire employees, excite investors, and drive massive growth. But eventually, every company must face the same test: the numbers. Because in the end, even the most ambitious vision cannot escape one fundamental rule of business. The story may inspire people, but the business model must still make sense. And when investors finally looked closely at WeWork's numbers, the $47 billion dream began to collapse.